This module explored the wide spectrum of property types encountered in Arizona real estate practice and the regulatory framework governing each. Understanding these distinctions is critical for accurate representation, lawful disclosure, and proper contract preparation. Each property category, whether residential, commercial, cooperative, or manufactured, carries its own unique characteristics, ownership structures, and compliance requirements under Arizona law. The discussion began with multi-housing and condominium properties, which represent collective ownership forms governed by ARS Title 33, Chapter 9. Arizona Condominium Act. Condominiums allow for individual ownership of units and shared ownership of common areas, such as hallways, pools, and landscaping. Owners are subject to HOA governance and recorded declarations, CC and RS. Multi-housing properties, such as apartment complexes, differ because they are typically owned by a single entity that leases units to tenants rather than selling individual ownership interests. Real estate licensees must understand these ownership differences to properly advise clients on rights, responsibilities, and financing eligibility. Next, the module examined townhouses and planned unit developments, PUDs. Townhouses often resemble single-family homes, but share walls and may include common areas managed by an association. PUDs, on the other hand, combine residential, commercial, and recreational uses under a unified plan. They are established under ARS Section 33-1801 ETC, Arizona Planned Communities Act, and typically include association membership and maintenance obligations. The flexibility of PUD zoning allows for creative community planning, but also requires buyers to review public reports, plat maps, and association documents before closing. The module then explored cooperative, COOP housing, a less common ownership model in Arizona, but an important one to understand. In a cooperative, a corporation owns the property, and individual residents purchase shares in that corporation rather than owning their individual unit. The share ownership grants a proprietary lease to occupy a specific unit. This structure is regulated by corporate law and governed by ARS Title 10, rather than by the condominium statutes. Financing for COOPs is often more complex, and resale transactions typically require board approval. The difference between residential and commercial properties was also emphasized. Residential properties are used for dwelling purposes, typically 1 to 4 units, and are governed by consumer protection statutes, such as the Arizona Residential Landlord and Tenant Act, ARS 33 of 1311, Section 33-1301 ACQ. Commercial properties, which include office buildings, retail centers, and industrial warehouses, are used for income-producing business activities and follow different standards for disclosure, lease structure, and financing. Commercial transactions often involve triple net NNN leases, percentage leases, and longer contractual negotiations. When identifying income-producing properties, the key factors include rental income, expenses, capitalization rate cap rate, and return on investment ROI. Licensees must ensure that all financial representations are accurate and verifiable. Disclosures required under R 4-28-1101 and ARS Section 32-2153 mandate that agents disclose all material facts affecting value or return, including known vacancies, deferred maintenance, or pending assessments. For example, a duplex with long-term tenants under below-market rent may have a lower current income stream, which impacts valuation and must be communicated to prospective buyers. The module also covered Arizona's treatment of capital gains on residential real estate. While Arizona does not offer a separate state-level capital gains exemption, most homeowners rely on the federal home sale exclusion, IRC Section 121, which allows individuals to exclude up to $250,000 of gain, $500,000 for married couples, if the property was used as a primary residence for 2 of the last 5 years. Because Arizona treats capital gains as part of taxable income, gains excluded under federal law are not subject to state income tax. This understanding helps licensees educate sellers about potential tax liabilities and when to consult a qualified tax professional. A major focus of the module was the difference between manufactured homes and park models, as these property types are prevalent in Arizona's resort and retirement markets. Manufactured homes are built under federal SHUDI code standards, are at least 320 square feet, and can be converted from personal property to real property through an affidavit of affixture. ARS Section 42-15203. Once installed on owned land. Park models, by contrast, are built under ANSI A 119.5 standards, are typically under 400 square feet, and remain classified as personal property, even when installed on leased lots in RV or resort communities. Licensees must verify property classification, affixation status, and titling through the Arizona Department of Housing, ADOH, and the Motor Vehicle Division, MVD, to avoid misrepresentation. Finally, the module concluded with an in-depth look at manufactured home regulations. These homes are built to HUD standards and regulated by ADOH for installation and dealer licensing. Once affixed to land, they are transferred by deed rather than bill of sale, taxed as real property, and may qualify for FHA or VA financing if they meet foundation and installation standards. Under R4-28-1101H and K, licensees have a duty to exercise reasonable skill and care and to recommend professional assistance, such as title officers or engineers, when dealing with manufactured housing issues. Key takeaways for review. Condominiums and townhouses involve shared ownership and HOA oversight, while cooperatives use share-based ownership structures. Planned unit developments combine residential and commercial uses under unified planning and are governed by the Arizona Planned Communities Act. Commercial and residential properties differ in purpose, regulation, and financing. Income-producing properties require disclosure of all material financial information and verification of rental data. Arizona's capital gains treatment aligns with federal law. Homeowners may qualify for the federal exclusion. Manufactured homes are built to HUD code standards and can become real property. Park models are smaller, built to ANSI standards, and remain personal property. ADOH regulates installation, dealer licensing, and safety standards for manufactured housing. ADRE oversees licensee conduct and disclosure compliance. Study tip: for exam preparation, focus on the legal distinctions among property types, the regulatory agencies involved, HUD, ADOH, ADRE, and the key documents, like the affidavit of affixture, that determine property classification. Also, remember that disclosure and verification duties under R4-28-1101 apply to all property types, reinforcing the licensee's responsibility to protect the public through accurate information and ethical practice.